Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you.
Mike, are we now into correction mode?
Well, we certainly hit that level on the U.S. stock market just a few days ago because the S&P 500 fell 10% off of its recent high set just right before Labor Day. And then on Tuesday, it bounced a little bit, and then as we're speaking at the moment, it's trading back down. But I think, the market went up so much, and we could, talk about news reasons of things to worry about. But the bottom line is the stock market went up so much from the March low to Labor Day that some sort of correction or consolidation, a sideways trade or something was likely to happen. The S&P 500 went up 63% from March to Labor Day, and it's just unrealistic to think it would do that again, go up another 63% without ever pulling back. So here we are, and we're pulling back. Last week, the S&P 500 and the NASDAQ closed below their 50-day moving averages. The next real support level is the 200-day moving average, which is around 3,100. But, if we gave up half the gains, that would take us down to around 2,900. And there's no reason that can't happen. I really don't have a way to predict when the correction would end, but I do think we're in one, and it's likely to continue into at least the election. And if there's election controversy in the United States or an explosion of the virus again, where the cases go up into the end of the year, it could continue into December. So that's kind of where we are now, I think.
Is there any particular play you should be making right now, or do you just sell, take your cash, and wait for the fireworks to end?
Well, I'm not, I have long positions. I'm not selling everything I own, but I have, really quickly went through my account and looked and saw stocks, some that I bought over the past couple of months that are lagging the market, down more than the market in the past week, and was down on a few of them or close to even, and I just got out of them because I do want to raise a little bit of cash in my own account, and so I can buy something later. So that's what I'm doing. I'm not selling everything I own, but I do think it's good to have some money set aside so you can buy later, reduce your risks, make sure you're well diversified. And one story that just hit my wire before you called, which actually could be part of the reason the market's even falling like this today, is Interactive Brokers sent out an email, I got it, saying that they're raising their margin requirements for all customers from 50% to 35%. I've never seen a stock brokerage house do that. They said they're doing it because of the chance of volatility after the election. I'm not on margin, but many, many Americans have gone on margin over the past couple months, and now they're going to be forced to do some selling. So that alone could be part of what's happening with the stock market, but I think it's just a prudent thing to do anyway to reduce risks. I mean, some people, they're not, if people are 100% vested in something, meaning the stock market or anything, then you might want to pare back for sure. But, if you own stocks, then you own bonds, and you own gold, and, you're balanced, kind of a balanced portfolio, then you don't really have so much to worry about. And even if we took up, we're already down 10%, which in past years, almost every single year, there'll be a decline of 10% from a high. In the last, from 2009 to this year, I think there's only been like 20% drops. There's one in 2015, one in 2018. In some ways they're rare, but on the other hand, we're in a strange stock market, where we've rallied up the way we did, 65%, and the economy is still a disaster, and the stock market hasn't reflected economic reality. Many companies in the United States are, as a whole, they're all losing revenue this year. The revenue is shrinking from where it was last year. There's only a few industries that earnings are growing. Gold and mining, silver mining too, is one of those few spots. But, there's many industries that are just barely surviving. Casinos, airlines, and so forth. REITs that are operating office buildings. Yeah, I mean, you can just go on and on and on. And here we had one of the greatest rallies ever in a 5-month period. So to go down 20%, I don't think would be a shocker, or even a little bit more than that. So it's an interesting time that we're in for sure.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth, and discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Mike Swanson. Mike, if the market didn't have a bit of a correction, would it seem strange and unusual?
Yeah, I mean, it has seemed that way to me, but in August, I thought we were losing some momentum in June, July, because the market stopped going up so much. And then in August, it just really took off. And it was a bit of a mania. I mean, the news stories are that there was record call buying in the United States on technology stocks, on just calls being bought, period. We saw Apple and Tesla go up in the last half of last month on news of stock splits. The type of price action I hadn't seen since really 1999, where there are a couple of companies that said we're doing stock splits and went up like that. So in a certain sense, I think it was like perhaps a last hurrah. But, I think we might be heading, for the averages, an environment in which the market does correct here and then rally back up. But it may not really do much after that for quite a long time. We could be entering a trading range market instead of one that makes new highs and does much after that. In fact, in a certain sense, that's sort of what's going on. The high in February in the S&P 500 was 3,400, and we went up to 3,600 and topped. So, we may just make minor new highs after this because there's not going to be a giant boom in the economy in the years to come. So I think up and down swings for the averages are what people should be expecting going forward, and to look outside just S&P and NASDAQ to try to make more sustainable gains. In particular, gold and silver, I think, are in real bull markets that are going to last a long time. So if I was someone 100% in cash, I'd be looking to buy there to hold. We saw agriculture commodities also come alive in the past couple months. They've been in bear markets since 2012 and went through their 200-day moving average over the past 6 weeks. But another market that I don't right now have a position in, but I think has the potential, or it will, to be a great investment is energy and oil stocks, because they've also been in bear markets for a long time, and energy stocks as a whole are still trading below their 200-day moving average. They're performing worse than stock market averages, so they're not good buys now. You don't really want to buy something that goes down more than the stock market does when the stock market drops. But at some point, that will bottom out. That bear market in energy and oil stocks will bottom out, and then they'll be great investments. They haven't gone up like Apple and Tesla, and at some point they'll bottom out. So that's something I'm eyeing. Will that happen after this stock market correction runs its course? I'm not sure, but that's something I'm going to be keeping my eye on as a possibility, personally, because I personally bought gold, silver mining stocks, the big caps, in years past. So I've got big gains on them, and I want to get in another investment buy point, maybe in energy stocks, before this year, sometime next year. But I got to watch it to see what happens.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. The governor of California signed a bill that will ban the sale of fossil-fueled vehicles at a certain point, I think 15 years from now. Who knows who's going to be the government then and whether they'll go along with it. But with that kind of attitude, does that spell an end to energy stocks, or are things like airlines and ships and big trucks still going to run on fossil fuels?
Well, this is actually one reason I'm interested in the sector, to watch it for a potential bottom in the coming months, because the news in it is absolutely horrible. I think back to 13 years ago when people used to talk about peak oil. Oil is going to run out, and oil went over $100. And those narratives seem to make a lot of sense and be real. And now we have two narratives, that oil is peaked forever because demand, they say, is peaked forever. And the story you said, the governor of California says evidence of that, right? And the trend of electric vehicles and all this kind of stuff. These are bearish, stories on the price of oil. And when you're in a bear market, that's what you get. Bad stories. And it doesn't mean the stories aren't real. And the bad news for energy and oil isn't real. It's very real. The demand, because of how bad the economy is crushing, or keeping a lid on oil prices and hurting the energy stocks themselves. But, at some point, the bad news and the weak demand will bottom out, or the bad news will end and the weak demand will bottom out. And that's when I want to be buying. And oil may not get up to $100 if the people that say it's impossible are right. But, it'll still bottom out, and still, stocks are going to still pay great dividends. Stocks like Exxon. I look at it like the agriculture sector too, because the news there has been bad for years, and it's been one of the worst bear market ever for agriculture commodities. And finally, it looks like they're trying to bottom out. They've had a nice rally off the low. The DBA ETF, for example, and some related stocks have really done well. So, you just have to look for long-term turning points. And when the news is bad and gets worse and worse, it doesn't mean it's the bottom, but you got to look for signs of a bottom. That's just how the bear markets are. It's like the opposite of a bull market. When you almost had the opposite mentality in the stock market, where it goes up 65%. The Federal Reserve prints all this money nonstop, and everyone participating in the market, myself included, gets to a point where you say to yourself, can the market ever drop? And then all of a sudden Labor Day comes and it starts to drop.
Now, yesterday, Fed head Jerome Powell said he's going to dive back into his toolbox and see what he can come up with. Well, why hasn't he come up with more, and what kind of tools does he still have left that he hasn't used?
Well, the real tool is something they call yield control. And this is a giant problem for everyone in the financial markets that are investing. So in March, they began this quantitative easing bond buying program, even buying ETFs like TLT and LQD and so forth, the latter being a corporate bond ETF. But the Fed is managing the short-term interest rates. They got them at 0, and they've said recently they want to see inflation go above 2% for, they don't say how long, but for some amount of time, which would be inflationary. But the next step, after this, would be to buy an unlimited number of 10-year, 5-year, 30-year, so forth bonds in order to maintain those low rates. Now, they haven't done that yet, but ultimately I think that's where things are headed. When this final correction does come to an end, when the virus situation does fade away, which I think it will start to by New Year's, let's say. So I think next year we're going to be in a little bit of a different world where the economy will start to really pick up. I think the momentum of the reopenings has already peaked, but next year I think we'll get a sustainable lift in the economy, and we will see the beginnings of inflation, and the Fed will begin at some point the yield control. And I think those policies are going to force people who aren't in it already into gold and silver as alternatives to owning bonds when you're stuck, at basically 0 rates and the inflation is starting to pick up. That's going to really be a game changer. But, that's in the future.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.